Hello and welcome back to LMN Options. In this channel, I talk about how I use value investing principles to trade options on the US equity markets. And this is the very first video in the Options Basics Education series. We're going to go right to the basics. What are options? So in a nutshell, options are basically contracts, agreements between two parties to buy and sell something. You want to buy a house, you sign a contract. You want to buy a car, you sign a contract. You want to buy insurance, you sign a contract. So, what kind of items do we expect to see appearing in a contract to buy and to sell something? So we're going to take a look at 5 concepts or 5 different components in options contracts. The first thing we want to ask is, what is the contract about? What item is being bought or sold? And that is what we call the underlying. If it's a contract to buy a house, the house is the underlying. If it's a contract to sell some stocks, the stocks are the underlying. Simple as that. Next, at what price have we agreed to buy and sell the stock? And this is known as the exercise price or the strike price. Basically, this is the agreed upon price that is written in the contract at which the underlying will be bought or sold. The next component is, how long is this contract valid for? How long until this contract expires? So this is the duration of time in which the underlying can be bought or sold at the exercise price. So let's explore an option contract to buy something. So what is this contract about? Let's say it's a house. So the underlying is the house. Let's say the transaction price of the house is $1 million. And this contract will be valid for 2 years. The next concept we're going to look at are rights and obligations. What does this mean? Let's go back to our example to explain this. So let's introduce our first character. His name is Adam, and Adam is the buyer of the contract to buy the house. And Adam has bought this contract from Bella. So that would make Bella the seller of the contract. As the buyer of the option contract to buy the house, Adam has the right to buy the house at the exercise price before the expiration of the contract. He doesn't have to buy the house if he doesn't want to, but if he wanted to, he has the right to do so. And if we look over to the other side of the contract, that would mean that if Adam within the next 2 years wants to buy the house, Bella has the obligation to sell him the house at the exercise price of $1 million. If Adam does not choose to buy the house, then Bella does not need to sell the house to Adam. So why would Bella agree to make this arrangement with Adam? And that brings us to the 5th concept, which is known as the premium. So for the right to buy the underlying at the exercise price before the expiration of the contract, Adam will pay a premium to Bella. Bella collects the premium as compensation for the obligation to sell the house if Adam chooses to exercise the contract. Let's look at another example. This time we will look at an options contract to sell something. What are we selling? We're selling a car. So the underlying is the car. The exercise price, let's say it is $10,000. And this contract will be valid for 3 months. So let's introduce another character, Cindy. Now Cindy is the buyer of the contract to sell the car, and Cindy has bought this contract from Dylan. Dylan is the seller of the contract. So what does this mean? As the buyer of the contract, Cindy has the right to sell the car at the exercise price of $10,000 within the next 3 months. If Cindy chooses to sell the car, Dylan will be obligated to buy the car from her. And likewise, for the rights to sell the car, Cindy pays a premium to Dylan. Dylan collects a premium to compensate for the obligation to buy the car. Cindy can choose whether or not to sell the car, but if she chooses to sell the car, Dylan has to buy it from her. I hope you've gotten a better understanding of the basics of how options contracts function. In subsequent videos, we will go into much more details. So if you're interested to learn more about options trading and about value investing, then subscribe to the channel and stay tuned for more.